Hi everyone, it's AJ Stockwell, and this is the last video of a three-part series where I'm giving you a bunch of tips and tricks that will hopefully make tax time less of a headache next year. One of the biggest pains that I hear from small business owners is how big of a nightmare tax time is. A lot of business owners get caught off guard, they haven't been keeping up with their bookkeeping, and maybe their books are a mess when it comes to tax time. And this ends up being a really expensive headache because their CPA has to clean it up, or they have to take time to clean it up or pay someone else to be cleaning it up. And it's just a nightmare that doesn't need to happen. So I've created this three-part series to give you a few things that you can start implementing today that will make next year's tax time less of a headache. If you missed the first two videos, I'm going to link to them in the description below. And don't forget to subscribe to my channel so that you get all of my new videos. Now let's get into the last 5 tips. So I'm going to be counting down from number 5. Number 5 is to review your P&L before it goes over to your CPA for doing your taxes. In the first video, I talked about looking at your budget versus actuals P&L on a monthly basis, and this is really similar to that. The difference here is that rather than looking at 1 month in terms of budget versus actual, we want to be looking at the entire year by month, so you'll have 12 columns, or maybe you're just looking at it on a regular basis and you look at the last 3 months or the last 6 months, and you want to be looking across those months and making sure that everything makes sense. So the example that I gave in that first video is rent expense. If you see that your rent expense is consistent for 4 months and then all of a sudden jumps way up, then that might be something that you want to look into. Maybe it's correct because you moved into a new office or something like that, but maybe it's incorrect and there's an expense that's categorized as rent expense but should actually be somewhere else. So again, not only do we want to look at a particular month's budget versus actual performance, but we also want to look at a P&L that has multiple columns where each column is a month of the year, and we're looking across that timeline to see if those expense categories and revenue categories make sense. Number 4 is to review your balance sheet for pretty much the same thing. In the first video, I talked about reconciling your bank and credit card accounts, and in the second video, I talked about reviewing your accounts payable and your accounts receivable, but there are probably other balance sheet accounts that you want to review and make sure they're correct. You want to make sure that any amount that's in an asset account is still correct and still reflects the value of an asset that's on your books. And then the same thing for liabilities. You want to make sure that those liabilities are appropriately stated. Probably the most common examples for this are going to be fixed assets on the asset side and other loans that you have on the liability side. So you want to make sure that those balances are correct. And if you don't already have some kind of Excel spreadsheet or schedule that you're using to track the value of these different assets and liabilities, then it's a really good idea to start implementing that so that you can track changes on a month-to-month or quarterly or annual basis. Number 3 is to keep track of vendors who need a 1099 in the US or a T4A if you're in Canada. QuickBooks allows you to track this very easily for a vendor, but it just needs to be set up correctly from the beginning. So I recommend that anytime you're setting up a new vendor who's going to need a 1099 or a T4A, that you mark the box on their vendor setup to say that you want to track them for that. And that way, when you run those reports in QuickBooks, it immediately pulls up all of those vendors or suppliers who will need those tax forms. I know that 1099s can be a big headache in January, and a lot of small business owners are looking through their vendor lists, trying to determine who should get a 1099, and then maybe trying to collect a W-9 from the vendor. But if you're setting up each vendor from the start to be 1099 eligible, then it makes January a lot easier because there's already so much to do in January that you don't want to have to be taking that extra step. So even though I'm recording this video in April, right now could be a good time to go through your vendor list and turn on 1099 tracking for any vendors that need it, but it's not already on for. And then you can commit to automatically checking that box anytime you're setting up a new vendor who should get a 1099 or T4A. This will give you one less thing to worry about in January. Number 2, which goes back to reviewing your balance sheet, is to review your inventory and make sure that the value of your inventory on your balance sheet is correct and really matches the value of the inventory that you have on hand. For any business that carries inventory and sells a product, I always recommend doing at least a monthly physical count of that inventory. This way you can make any adjustments that are needed or look into any discrepancies. Physical inventory counts are one of the most important controls for a business that carries inventory. Once you do a physical count, you can compare those quantities on hand to the costs that are on an invoice and then determine the value that your inventory should be. So if you do your physical count and you find that you have 100 of a certain item and you look at the supplier invoice and find that it's $10 per unit, then you know that you want to be carrying $1,000 for that inventory item on your balance sheet. And if you don't know how to make that adjustment in QuickBooks, that's okay. You can probably give your CPA the value that it should be, and they can help you make that adjustment. And then my final tip isn't really related to bookkeeping, but it's actually to set non-business goals. So we talked about setting a budget and setting goals for your business in the first video, but it's just as important to set non-business goals. Because if all you're setting is goals for your business, then sometimes that can consume your personal life. But work-life balance is important, and what you do outside of work definitely affects your performance and your business performance at work. So you want to make sure that you're taking care of both your physical and mental health. So for physical health, that might mean nutrition, exercise, sleep, and hydration. And then for your mental health, that could mean making sure that you're taking time to read a good book or detaching from work completely. You know, maybe you want to plan a vacation with your family or something like that, but just some way to detach from work a little bit, because I know that work can sometimes consume your personal life if you don't make your personal life a priority. So there you have it. In these last 3 videos, I've given you 16 tips, because I gave a bonus in the second video, for making tax time less of a headache next year. So I do hope that you got something really great out of these videos, and if you did enjoy them, let me know in the comments. If you're going to start implementing them, let me know which ones. Let me know which ones are the most helpful. And if you did enjoy this video, please give it a thumbs up, hit that like button that's below the video, and don't forget to subscribe to my channel so that you don't miss any of my other videos.